Hello and welcome everybody to the Pulse with the PeakBot team. I'm Dylan, your co-host, joined alongside with Ben. We are two of the three co-founders of PeakBot, the automated trading platform for the retail trader. We are happy to be here. Ben, welcome. Thanks for
Thank you.
hosting with me.
Yeah, of course. I'm very excited about this slot that we've got with Tradier on the Tradier Hub.
Yes. So we will be coming to you live here on the Tradier Hub and I believe on YouTube as well. Every Monday morning, 9 o'clock Eastern here, right as we get started on our trading week. So we're here to kick you off. This show, for a little background, we are here to bring you information on high premium weekly options contracts to get you set up for a great week of trading. Ben, that's our bread and butter, right? We've gone ahead and automated the options selling process for the retail trader. I'm sure as we get into this show, as the weeks come, we'll discuss a little bit more of our history and where we came from and all that. But yeah, we are here to help educate, automate, and elevate your trading process when it comes to options selling. So Ben, just a brief background on us. We started this business about 3.5 years ago, joined by our third co-founder, Dalton, who happens to be my younger brother. If he ever jumps on, you will see the resemblance. And Ben, you think it's helpful if I give just a brief background on PeakBot and then we get into the good stuff, or what do you think?
Yeah, let's do like a 30 seconds on PeakBot, 30 seconds on you, and then we could do 30 seconds on me, and then I'll hop right in.
Awesome. So 10,000 foot flyover on PeakBot. So as we've already mentioned, PeakBot has automated the stock and option trading process for the retail trader. The way we've gone about that is actually connecting directly to your broker. So we're connected and we are developers with Tradier. So we connect directly to their API, and that is where our trades are being executed. Of course, we're integrated with a few other brokers, but we're not here to talk about those other brokers. We're here to talk about our great partnership here with Tradier. Fantastic team, and have been making it really easy for us to get the word out there and get everybody automated. So our whole mission here with PeakBot is to make automated trading easy, affordable, and transparent. The reason why is because we don't believe other platforms have done that yet successfully. Are we the first automated trading platform out there? Absolutely not. Will we be the last? I hope not. But we really pride ourselves on being accessible, providing as much information as possible, probably too much at times, Ben, we've been told. I mean, you go to our website, usepeakbot.com, which I'll throw a banner up in just a minute. We share just about everything that goes into our code and our algorithms. So we encourage people, hey, go build it yourself. You're going to find out how hard it is, and or you will try to manually trade it, and you'll probably come crawling back. So just a really brief intro on myself. I am, again, one of the three co-founders. I handle the sales, marketing, and business development side of PeakBot, working directly with our customer base. Our traders will tell you, they have my cell phone. We are accessible, probably a little crazy on my part, but we're a growing business. We want people to feel comfortable to be able to reach out to us at any time. We're also I'm going to put this up there. We are live. So if there's questions, put them in the chat or text us at the number on screen here. So Ben, I'll kick it over to you for a quick intro and we'll get into the good stuff.
Thanks, Dylan. That was a short 30 seconds on your end.
Yeah.
So just a brief background on myself. Like Dylan said, I'm one of the co-founders here. I've got my hand in pretty much everywhere in this business. Started out with mainly bot development, our strategies, and now overseeing a bunch of different operational capacities within PeakBot. Additionally, I am a licensed CPA. People tend to get more comfortable when they hear that, knowing that there's a guy behind the scenes that at least has some sort of idea on what to do with numbers. So felt I should mention that there. But if we're ready, let's hop right in, because we know the market's about to open, and we want to get you guys through this analysis. For any of our existing audience that is viewing, please, like Dylan said, put questions in the chat. Our format will be a bit different. We'll be answering questions in the chat, and we'll just be carrying on this show. So that way we can get all this information before the bell rings. And for anybody new, if you don't know, you can create a PeakBot account. You can trade our wheel option strategy. We're going to focus on that mainly during this time period. And we'll be sending out an email to anybody trading or automating the wheel strategy on Sunday night with our updated watch list. So what we're going to do today is we're going to show you how we compile that watch list, how we sort it, and then we're going to talk about some nuances in the watch list, and then we're going to look at some charts. Probably going to do like a top 10. We'll see how much time we have. We'll probably do a top 10 and have some quick commentary on that. So if that all sounds good, Dylan, you want to share my screen and I'll show these people where we get our data from.
Yeah, let's get into it. So your screen should be live here now, Ben. I believe we're taking you live to barchart.com where we fetch a lot of our options info. I'll hand it back to you.
That's right. And we are in no way partnered with Barchart. We do pay for Barchart Premier. So if anybody from Barchart's watching and they want to give us a free Premier subscription, let us know.
Not an ad, but it could be.
But anyways, you can view some of this data with a free account that I'm about to share. However, having the Premier account unlocks all of the data. So we're just going to go to the options tab here, and then we're going to click on most active options. And then we want to make sure that this is sorted by options volume, which it seems like it is. And if you have a free account, you'll only see the top 20, which is fine. And then, you can continue to scroll and we continue to scroll. So what I like to do at this point is, the data on screen is great, but I like to download it. So I've already downloaded it. I'm going to pull up the downloaded sheet. I think I need to share a different screen now. So let me go ahead.
All right. First show.
Well, I don't think there's a seamless transition between a Chrome browser and an Excel file. But what were you about to say?
Yeah, I was going to say, look, nothing's easy. That's okay. We're going to roll with the punches here. While you're getting that pulled up, something, if you can't already tell, I'm more of the layman here. So I'm going to be giving commentary as it relates to the everyday person. And Ben and our co-founder Dalton, if he joins us at any point, they're more of the technical traders. These guys coded these algorithms that we've automated. So it looks like you got your screen back up.
Awesome.
Just explain what you've done. You've downloaded information from Barchart. And what exactly are we looking at here? Is this the option chain?
That's right. So this is the exact data from Barchart that we just saw on screen. It's just in an Excel document. And it's still sorted the same way. It's still sorted by options volume. So what I've done is I just put a filter on this top row here. And then I'm filtering for volume over greater than 20,000 because we want to make sure that these contracts, there's enough liquidity in these chains. So that way we can get into these positions at a good price, right? We don't really want the spread to be too wide because that could affect our overall return. So we want to make sure there's enough liquidity there. Additionally, and if you're putting together this watch list for yourself, this is totally optional. Additionally, what we do is we filter for stocks that are below $150. Now, we do that because, and I'm just going to stop sharing my screen here.
No problem.
This is the basics of what we do here. We do this because the average account size for PeakBot traders ranges between like $7,000 and $12,000. Now, if we're trading contracts for a stock that's worth $150, we all know one contract equals 100 shares. If you're trading 100 shares of a $150 stock, well, do the math there. That's $15,000 that you would need to have set aside in the case that you are assigned. So Dylan, let me pull up my screen, but maybe you could just explain the basics of the wheel strategy for those that aren't familiar, because that's mainly what we're going to be talking about right now.
Absolutely. So in fact, what I can do, Ben, is I should be able to share my screen super quickly just to show the in-app diagram, if you will, of the wheel. So I'll zoom in here a little bit. For those of you who are not familiar with the wheel strategy, please know that we did not reinvent the wheel here. All we did was automate it. The wheel is a very popular time-tested option strategy that's been around for decades. So all we've done is throw it in an algorithm, not to minimize what we've done. Hasn't been easy, but what we've done is we've gone ahead and taken the simple strategy of selling cash secured puts and or covered calls on these stocks on a weekly basis. So our contracts are running weekly. So they open on Monday and expire on Friday. There's also an entry point on Tuesdays just in case the market was closed or we caught you sleeping a little bit. But we're running weekly contracts here. So if you don't own the shares, you're going to start by selling a cash secured put. Our basic wheel, if you will, and we'll get into what our vertical hedged wheel looks like, but we're selling everything on the 25 delta. So giving you enough premium to make it worth your while, typically between 0.5% and 2%. I'm sure at some point here on this show, we will share our watch list where you can see that full list of stocks. We're playing defense for you. You can only trade from the watch list. We're not going to let you get into any overexposed position or some lousy option chains. So if we finish above our strike price at the end of the week, we are going to expire worthless, out of the money, which is the best case scenario, allows us to keep our full premium without getting assigned any shares, right? Wipe our hands clean, move into next week and do exactly the same thing with another cash secured put on the 2.5 delta. If we do get assigned shares, meaning we fall below that given strike price, well, we will get assigned 100 shares of that stock. We still collect our premium, which is the name of the game here. We like to call that rent. That premium comes in immediately as you open that contract, cash injected into your account. That's probably not the best way to say it, but just trying to make the point there. So if you do get assigned the shares, we'll sell a covered call the following week. And instead of using your cash to secure the contract, we already have the shares, so it's covered. And we're going to sell a covered call. We're going to use those shares as your asset there and your collateral. And we'll sell a covered call on the 2.5 delta. And we're going to do this in a circle. If we finish above a strike price, we'll start again at the top by selling another cash secured put. If you can't finish above the strike price of the week while you own the shares, you're going to continue to own the shares and run new contracts every week until you do finish above that strike price and get back to the top with a cash secured put, like a rental property. So we're collecting rent every week. That's the name of the game here. So did I miss anything, Ben?
No, I hope you painted the picture. I know we've got the visual on screen, but I hope you painted the picture for anybody new to the wheel strategy, how powerful this could be.
Yeah, passive income.
And we can hop more into our rental income analogy in just a minute, because I do love that analogy. But I did want to share my screen again to show our watch list, right? So all of those steps, going onto bar chart, downloading the Excel file, filtering, trying to figure out what's what in there. You could do that, or you can go to usepeakbot.com/watch lists, and we've done that for you. Now, this might look like a lot, and I'll zoom in a bit here. So as Dylan was just explaining the wheel strategy, we also explain the wheel strategy on our watch list. Again, transparency is huge for us, right? I want you to be able to come in and trade our strategies manually, right? You should be able to do that with any sort of algo trade. You should fully understand what you're doing with your money before actually doing anything with it. So we do explain every single step of the way, and we explain these strategies on our website in even greater detail and provide examples there. So anyways, to get down to the meat of this, I'll just quickly talk through the column headers, and then we'll talk through why there's a lot of yellow right now.
Yeah, that's scaring me.
So we've got our company name, we've got our stock ticker, we've got the sold put strike, and we've got a bought put strike. So Dylan was just explaining a cash secured put, a covered call. We do default to selling spreads. We want to sell a vertical put spread, credit spread, to get you started. And the reason we want to do that is because nobody knows which direction the market's going to go. Nobody knows which direction a particular price of a stock is going to go. So we want to offer you some protection. So as Dylan was mentioning, we trade around the 25 delta for our cash secured puts. What we do, if you don't turn off that hedge, there is an option under advanced options when getting set up. Don't need to get into the details. But if you do not turn off that hedge, you're going to default to having this layer of protection. Think of it as an insurance policy. And Dylan will get into that in just a minute in our rental property analogy. So we're going to sell the strike nearest the 30 delta. And then we're also going to buy the strike nearest the 10 delta. So what we do here is we calculate what that spread is, and we show you what your maximum loss can be, right? So on Carvana here, our number one on the watch list. By the way, we sort our watch list by estimated return, which we'll get to in a second. So on Carvana, our sold put is $25.50 and our bought put is $20.50, creating a $5 spread. So that's a max loss of $500 per contract. Now, if you were to be assigned Carvana, if the stock price were to end, if the stock price were to be between $25.50 and $20.50 at expiration, you would be assigned 100 shares per contract. So you would need $2,550 to cover that. So that way you would be able to own the shares. We're estimating that the premium netted out. So we're going to earn credit for selling a put, and then we're going to pay credit for buying a put. So that net credit, that net premium is going to be about $99 there, which when we calculate that into the amount of cash we need set aside to make this trade, that's about a 3.9% return. I'll round up there. Yeah. However, we do see Carvana is reporting earnings this week. That is one thing that we will call out. 2 weeks ago, this list wasn't so yellow. Yes. This week, as we can tell, earnings season is upon us. So we want to be cautious. We always caution traders, even when automating, to be careful in earnings season, because we've all seen the crazy swings that stock prices can take during earnings season. Dylan, any commentary you want to fill in between what we're showing on screen or your past experience with earnings reports?
Yeah, well, I haven't had the best experience trading earnings. I've caught myself going premium hunting, as we like to call it. And I just put a little message on here. Anything highlighted yellow, just to be clear, they're reporting earnings this week. Not financial advice. We're not financial advisors, but we like to say take caution here, right? When you're dealing with 100 or multiples of hundreds of shares at a time, earnings reports are scary, right? Because stocks do this or they do this most of the time. So we don't really love that volatility. I also want to encourage anybody watching here to hang tight. What we're doing is we're showing you everything under the hood right now and how all this works. We're going to show you how easy it is to actually automate this process. 3 steps. So we're going to get there in just a few minutes, I'm sure, but hang tight. We're going to show you the PeakBot platform, how it connects to your broker, and how simple it is in under 30 seconds to go ahead and automate one of your selections here. So, Ben, that's really all I got.
Awesome. Cool. So, like I said, you guys can just hop on this. The link here is usepeakbot.com/watch lists. There are different tabs in the watch list, as you can kind of see on my screen. I'm on the editor screen, but your screen will look a bit different. But we're going to focus on the wheel here. And that's about it for the watch list.
The column in what looks like row or column I, that's the estimated return. That's how we're stack ranking this list. Okay. Yep. That's the priority order that this is being put in. Not to say that you should always just be hovering at the top of this list. In fact, some of our biggest accounts, traders who have 6 figures in PeakBot automated portfolio, guess what? Ben, scroll down a little bit. You're going to see stocks that are paying you closer to 0.5%, 0.7%, 1%. And if you look over, you're going to see that these are businesses that you're likely more familiar with, that the everyday person has heard of. Now, this week, of course, some of the big ones have shifted up toward the top because they have earnings. But at the bottom of this list, you're going to see the Amazons, the Verizons, the Starbucks, the BPs, the Morgan Stanleys of the world on this list. Because, of course, you still have the same percentage chance of being assigned shares, right, if we're all trading on the same delta. But the stocks at the top, they're more volatile. If they're paying a higher premium, it's not just because. There's a
risk
reason.
Reward.
Right, risk and reward. If it's paying you a higher premium, if you're chasing 2.5% or 3% on some of these stocks reporting earnings, it's because the stock's pretty volatile. And you don't need to, take our word for that. You can go ahead and look at the chart and you'll see it for yourself. So just wanted to put that out there as well.
Cool. Last thing, and then I'm going to hop onto a chart. I'm highlighting the SQQQ and the TQQQ here. They were added by popular demand. If you're looking to avoid earnings altogether, hop onto these. Like we're estimating a 1.3% return on each of these over the next week.
Yep.
A good option to consider. So Dylan, what I'd like now is maybe we can take this is going to be rapid fire too. I'm just going to quickly show what I'm looking at. If you want to perform an extra layer of analysis to, make your own decision on if you want to automate this particular stock or not. This is kind of what I do very quickly. So Dylan, maybe I'm going to pull up my other screen. Maybe we could just go through the top 5, and then we'll pull in the top 5 that aren't reporting earnings, and then we could just take a look at those charts. So as we're looking through these stocks, Dylan, what's the next one after Carvana? I'll just kind of flip through these.
Yeah, give me 1 second. I'll pull up the watch list on my end. My apologies. I'll get that for you in just a second. Go ahead and continue.
It's going to be Sunrun. So I'll just pull this up. So as we're looking at these charts, what I have on screen is pretty simple, right? I've just got this purple line here, and that's the 50-day exponential moving average, or 50-bar exponential moving average. Sorry. I'm on the 1-hour chart. I usually look at a range of 1 month. So that way I can look at overall trend direction. So I will go in here sometimes and, draw some trend lines, see how we're progressing against trends. It looks like there's a bit of a wedge forming here. So we won't get into what all of these different trend shapes look like, charting shapes look like. But what I do like to see about Sunrun here is, hey, we've got 27 analysts looking at this. The overall consensus is a buy. Over 55% of analysts think it's a buy. I look at our average prices, much higher than what we're trading at now. That gives me a little bit of confidence, and it does look like we are consolidating a little bit down here on this support line. Could be a good option to ride that wave up if there is another wave to ride up. Dylan, what's the next one?
Yes, Sunrun. So ticker RUN.
Yeah, that's the one I'm on right now. What's next?
Oh, okay. After that would be Wayfair.
Cool. So just a quick look at Wayfair. Again, overall consensus is a buy here. I think, when looking at these charts, this 50-bar exponential moving average is going to be trending down. That's just the direction that the market's been heading. But it's important to see, did we bottom out? It looks like for Wayfair, we hit our low a couple days ago. So I don't know if this trend is done here. But, based on what analysts are saying, based on trend movement, based on the fact that it's reporting earnings, a little risky in my opinion. Dylan, what's next?
SoFi Technologies, ticker SOFI.
All right, so this is a low dollar value stock. So if you are looking to get into this, we could very quickly, I forget what strike we said we were going to trade there.
Right now,
I'm just going to look at the chain. Probably should be $6.
Yes, the sold put strike is $6. The bought put strike is
here. Yeah, so we're going to earn about 19 cents when we net out the bid on the 6 and the ask on the 5. We're going to net out about 19 cents, so $19 per contract. That's a nice return. That's a nice return when you only need to have, if we're selling the $6 strike, when you only need to have $600 set aside in your account to make that trade. So as we can see, this chart is all over the place, right? Again, 2 days ago, hit the 1 month low. The EMA is still trending downwards. We're reporting earnings this week. Analysts say hold. Personally, I would probably avoid this one. Dylan, what's next?
Roku. Everybody's had Roku at one point. That's a more expensive stock than I thought.
It is a more expensive stock. It's on by popular demand. We do make some exceptions to that $150 rule. Again, on by popular demand. We can see we're reporting earnings this week. Lots of gaps down here. That makes me really nervous. And due to the high dollar value analyst hold, again, I wouldn't want to trade this one. But what's next?
So Ben, that would be those are the top 5. Just a reminder, those all have earnings this week. If you're watching this live, those have earnings this week. Just take caution. Now we're going to go into the top 5 that don't have earnings this week. These ones are ones that I consider really earning the top spot. So Marathon Digital Holdings, MARA, would be the first one here. And that's paying about a 1.75% return on premium, which is about $14 on the estimated $800 that you'd set aside.
Awesome. Cool. So as we can see, there was a big spike up on the 23rd. That might have been when Marathon reported earnings. I'm not sure when Marathon reported earnings, but that could have been a driver of that price change. But I do see what looks to be like a downward trend here. Maybe it's a little flatter on the bottom. Maybe there is some support building. We can see the exponential moving average. It's gotten off its dramatic increase, and it's kind of flattening out, kind of decreasing here based on the hold. Now, due to the fact that Marathon is not reporting earnings, that makes me feel a little bit safer with this stock. It might be something that I add to my portfolio as I'm looking to get set up for the week. Next one we've got is XPEV.
Yep.
Ticker XPEV, XPeng Inc. Kind of the same story. Like we saw same story as Marathon. Kind of saw an increase. Now we're kind of flattening out. The EMA is trending upwards, so I do love to see that. I do want to see an upward trend because with the wheel strategy, I call it a neutral to bullish strategy. If the stock price stays the same, great. We're going to earn our premium. We're going to wipe our hands clean at the end of the week, and we're going to do the same thing next week. And if the stock price goes up, fine. We don't really get to participate in the upside when we're selling these put credit spreads, but we earn our premium, and that's what we're here to do.
Yep.
What's after XPEV?
Fisker, FSR. And just a quick note here while we're doing this analysis. Anybody who's thinking about doing this, whether you're doing it manually and making trades or hopefully thinking about automating it here with PeakBot, because that'll make your life a whole lot easier. Don't trade this on stocks that you're not comfortable owning. You will eventually get assigned shares, and you got to be okay with that, right, Ben? We get a lot of phone calls for people saying, "Oh, I got 100 shares of Riot or Upstart. I don't really want to own." All right, well then don't trade it, right? Get toward the bottom of the list. Find a stock that you're comfortable with. Go ahead, Ben.
All good. So Fisker, we can see, is in a downtrend here. To consensus of a hold amongst 14 analysts. Yeah, I know that. I know we're coming up on time, Dylan. So I do want to shift it back to you. Maybe you can give the rental property example, so that way our traders kind of get a different visual of what can happen.
So I think, Ben, you tell me, we are live. I think it would be helpful for at least to show the PeakBot app and show them how we can add a stock into their portfolio.
Yeah, do it.
Okay. So I'm going to pull that up here in just a second. So what you're looking at here is app.usepeakbot.com. Ben, I'm not sure if you can throw up a banner while I'm doing this explanation.
Yes.
Add a new one.
I'll attempt.
All right. You know what? I got it right now. App.usepeakbot.com. So this is where you're going to go if you want to. Well, this is actually, it's a mobile. I'm sorry. It's not a mobile app. It's a web-based app. So you're not going to be finding this in the App Store on your iPhone, your Android, but it's web-based, very mobile-friendly. A lot of people use it on the desktop. A lot of people use it on their phone. So app.usepeakbot.com. Now, before we get into this, the reason why we explain this as a rental property, okay, is that's the best way to explain it. So if Ben and I, okay, Ben's into real estate himself. If Ben and I went and bought a property out in, I don't know, Arizona. I seem to always default to Arizona. I don't know why. And we bought that house for $300,000, which if that's even an option anymore, I doubt it. But let's say we spend $300,000 on this house, okay? Well, our goal is to rent this house out, whether it's every few days, a week, a month, Airbnb, to an owner, whatever it might be. We're collecting rent. Great form of passive income. And let us be clear, PeakBot, yes, we've automated the trading process, but we see this more as scheduled investing. Investing is always smarter than trading, if you ask me. Maybe an unpopular opinion, but we want to take less risks here while still getting a consistent reward. So with the rental property example, if we were to, let's say we rented this house out for, I don't know, 5 years, 10 years. And 10 years from now, we were to sell this house for, call it $200,000 or $250,000. Well, on paper, that's a loss, right? That's a $100,000 loss or a $50,000 loss. But Ben and I know damn well that we didn't lose $50,000 on this investment, did we? Why? Because we were collecting rent every week, right? If we make 0.5% here, 1% there, 2% here, we know that the longer we collect rent, eventually, theoretically, and also realistically for my account and many other PeakBot traders, eventually our rent will outweigh any losses we incur along the way. Now, what are those losses? Well, in the rental property example, your dishwasher breaks, your AC unit goes out, a rowdy guest breaks something. You're going to have to spend money to replace things. And that's in the red. Same thing with the stocks, right? Look, if you get assigned shares on, and you got to own 100 stocks of a share,
which isn't a bad thing. That's not a bad
thing, right? I always say, if we're on the Price is Right and you lose because you guessed too high and your consolation prize is 100 shares of Amazon, I'm walking out happy, right? So with that, we want to kind of get you to understand that this is the long game, right? Of course, it's easy to come in here every week and look at the new watch list and make changes. And we have a lot of traders who do that. But we have a lot of traders who also are way more passive about this, right? My father, who, doesn't know what direction is up in the stock market, he's got this on Amazon, Verizon, and Starbucks. And he's not going to change that till the day he dies, okay? Because he's collecting 0.5% a week. What does he care if he owns 100 shares of Amazon? He's got the cash to do it. And that's his strategy. So again, think of the rental property here. We don't care about the value of the property nearly as much as we care about the rent that we collect. So same thing with the stocks.
And to translate that into trading, like, we do care about the estimated premium, or the premium that's going to be paid out, right?
Yep.
So there are stocks, and the longer you stay in this game, the longer you kind of can pinpoint what stocks are paying out higher premiums. Dylan and I have been doing this for 3 years now, automating strategies. So we've got the pulse on what stocks are paying high premiums. So we're here to provide that information out to you guys. So Dylan, we're not going to go over this analogy every week. I know that took a lot of time, and we're not going to always show the app, but we will, since this is our first show on the Tradier Hub here. So Dylan, quickly walk us through, and then let's wrap this up. And the market's open by now, I'm pretty sure. So let's get these people on their screens trading.
So we said easy, affordable, transparent. We can get into the pricing. It's less than a Netflix subscription, but we'll worry about that later. 30-day free trial. These are all important things to know. But here's how easy it is to get started. I don't know. I always make this analogy, and I'm just going to say it again. For anybody who's ever watched MTV Cribs, they always used to say this is where the magic happens. Well, this big green plus sign is where the magic happens, okay? So there's a couple other things here. We have our budget and bots. That is not our live account balance, okay? That is just telling you, hey, here's how many dollars you have activated in your automated portfolio below here. So we didn't give any love to the Iron Condor strategy on this show. That's
okay. Next time.
It's a pretty neutral strategy, not a neutral market right now. So as you can see, these are some stocks. This is my personal portfolio, okay? These are stocks that I'm running week to week. So we're going to go with Marathon. I want to add that because that was the highest trading stock on our watch list that isn't reporting earnings this week. So if you click that big green plus sign, you're going to be in and out of here in 3 steps. Step 1, select your strategy, okay? Step 2 is pick your stocks. Now, if you click on this big green plus sign, if you click on this view watch list, green text here, that's going to open up the watch list for you, okay? Now, I already have my stock selected, so I'm going to type in this ticker, or I can type out the name of the business. Either way, they're going to show up, okay? So I'm going to type in Marathon here. Please note that you can add as many stocks as you want here. We're not limiting you there. Go crazy. For this example, I'm just going to add 1. But the final step is enter the number of contracts you want to sell. This is your budget, right? So we're going to start with 1. You're going to be limited, depending upon your subscription level, to 10 contracts per stock on the wheel. We think that's plenty. If anybody really needed more,
diversify. If you need more, diversify.
Yep.
So click on advanced settings. You're probably going to do that, but
So this is the new vertical wheel now that we've introduced actually this past week. We've built in a vertical credit spread. Okay, so this is going to automatically be turned on for you. You can turn it off, but we kind of, not financial advice, but that's more for your advanced trader, right? That's now naked put. So we want to give you more protection on the downside while still being able to indulge on the upside. So with this advanced setting, you're actually on the put side. Since I don't own any shares of Marathon, I'm going to be, Ben, correct me if I'm wrong, selling the 30 delta and buying the 10 delta. Okay.
Right.
So that'll automatically be hedged for me. Now all I got to do is hit activate and agree. And that stock is now added into your automated portfolio. Here's Marathon. If I left that here, which I think I'm enticed to do, that's going to open up a new contract for me Monday morning. Now, we missed the first, Ben, 90 minutes, 2 hours of the market because we like the market to settle down a little bit. We don't want to deal with all the craziness.
Monday madness.
Yep. So we let the market settle down. You'll enter your contracts either Monday or Tuesday morning, typically between 11 and 12:30 Eastern. So it'll automatically happen for you. If you have your notifications set up on your broker, Tradeer, whatever it might be, you'll be notified as the trade is executed for you. Rather than the alert telling you it's time to go buy or sell, which is great, only as good as your reaction time, we've executed for you. So it'll open the contract, and on Friday when the market closes, it'll automatically expire for you and do the same thing for you next week. So we'll get more into this. But again, super easy. We wanted to build it that way because we don't believe anybody else has done so. Some really important must-read guidelines down here, but we can get more into that another time. So again, that's at app.usepeakbot.com, 30-day free trial. Check it out. We can schedule a personal demo for you. And to schedule a demo, just go to our website, usepeakbot.com. So, Ben, anything that we missed here?
If you don't have a brokerage account, create one on Tradeer. Go to usepeakbot.com/Tradeer to do so. By signing up with PeakBot, there's some perks. So you'll be alerted what those are. And if you don't have a PeakBot, create a PeakBot account at app.usepeakbot.com. Send us home, Dylan.
All right. Well, thank you so much to Tradeer for introducing us to the hub here. I don't know why I have Fisker on screen. It's gone. So thank you again to Tradeer and the whole team over there. Good luck. Happy trading. And we will see you at the peak. Peace out.
See you at the peak.